It's time now for business with our business editor, Yuka Royer. Yuka, you're starting with those tensions along the Russian-Ukrainian border, which are driving oil prices up and hammering global stocks.
Well, the threat of a Russian invasion of Ukraine, obviously, if it happens, it's sending jitters through the global energy and stock markets. Now, this despite Russia denying that it has any such intention. Fears of an imminent military offensive rose over the weekend after major Western governments asked their citizens to leave Ukraine, and the White House warned it could happen soon. Crude oil prices are being pushed closer to the $100 a barrel mark, and suppliers are assessing the impact should a major disruption of Russian fuel exports occur. WTI and Brent both surged more than 1% to around $95 per barrel. As you can see there, it's the latest figures. The WTI rising almost 1.5%. Prices of oil are now at the highest level in 7 years. The geopolitical tension coming after prices had already risen sharply over the past months after a historic plunge back in 2020. As you can see there, that of course was caused by the pandemic in the early days of the coronavirus pandemic there. As oil prices surged, global stocks are spooked by the Ukrainian crisis. European indexes opened the week lower, with London's FTSE off by more than 1%, and Paris's CAC 40 and Frankfurt's DAX both dropping more than 2%. Sorry, there's an error in the figure there, but Paris's CAC 40 actually opened down by 2.2%, and London down by 1%. Now, in Asia earlier, Tokyo's Nikkei finished the day down more than 2% as well. Toshiba shares dropped despite an upbeat earnings report for the final quarter of last year, with operating profit more than doubling from the same period the previous year. This as the company announced an extraordinary shareholders meeting for March to seek approval for a plan to split the firm into two. In China, property stocks weighed on the market after the country's central bank said it would not use real estate as a short-term method to stimulate the economy. Now, tensions over Ukraine are also having a negative impact on Russian stock markets. The main Moscow stock index, MOEX, is down more than 2.5%. As you can see there, this after dropping nearly 3% on Friday. The index has lost around more than 20% since hitting record high levels last October, and yields on Russia's 10-year government bonds spiked to their highest in nearly 6 years last month. Russia's currency ruble can also suffer a setback. It's lost about half its value against the euro since Moscow annexed Crimea back in 2014. Russia's central bank let the ruble free float later that same year, following waves of Western sanctions as it sought to protect gold and foreign currency reserves. So the invasion could deal a blow to Russia's economy as well. The annexation of Crimea dealt a blow to Moscow's stock market back then, and as I mentioned, the currency ruble lost half its value. Russian assets are once again under pressure as investors worry about the possible extension of Western sanctions targeting officials, banks, and the energy sector if Moscow attacks Ukraine. So that threat is certainly expected to be part of the message delivered by the German Chancellor Olaf Scholz, who's heading to Kiev and then to Moscow this week. Now, change of pace, and just because we can't forget about Valentine's Day, we cannot stop talking about it, you may or may not want to shower your love interest with gifts. Traditionally, it's a busy day for florists, but supply chain issues are having an impact on the flower market, including for all-important roses. Logistic issues are affecting stock as well as prices. In the United States, though, wholesalers in Los Angeles are still hopeful that love will prevail. Charles Pellegrin has the story.
Roses are red, violets are blue, planes are grounded, ships are too. This year, wholesalers are having a hard time getting all the flowers they need for Valentine's Day.
There are issues with getting trucks in and out, in logistics, and I think that's been a long chain of events with the pandemic, with bottlenecks, with production, growth production, and also airline routes have been rerouted, and so it's becoming more challenging to get flowers into the area.
But consumers are still willing to dig deeper in their pockets. This florist has seen prices double since last spring.
Even the prices have gone up, I'm still able to, do the arrangements, and they don't mind about the price, which is kind of surprising.
But some people are choosing different gifts. Retail spending is expected to reach close to $24 billion this Monday. with candy being the gift of choice for most respondents at 56%, while flowers are third at 37%, just behind greeting cards and ahead of spending an evening out, all of which will have been affected by the 7.5% bump in inflation over the past year.
I think we all realize that that inflation is around us everywhere, no matter where we go, and it's in flowers as well. But I don't think you can put a price tag on the cost of love.
And here's to hoping consumers will agree.
All right, well, that concludes our business update. Thank you very much, Yuka Royer, for business.